Hello and welcome to the Friday market update. Well, mortgage rates have hit the pause button, and should your buyers also hit the pause button? Mortgage rates pretty much went sideways this week, remaining slightly above 7%. It was a pretty tame week on the economic front. We did see a somewhat obscure report come out that the financial markets don't give much weight to, and why, I don't know. It's called the QCEW, Quarterly Census of Employment and Wages. And it is a report that really reconciles the actual data released previously on the BLS, Bureau of Labor Statistics, jobs reports that is reported monthly. Now, I have talked a lot about my frustration with the BLS monthly report. I just don't believe all the data. And the QCEW report actually confirmed that. So the report covered a period from Q2 of 2023 to Q2 of 2024. And guess what? The BLS reporting that Wall Street traders rely upon every month reported 2.5 million jobs created during this time period. Well, once it was reconciled by the QCEW using the actual data, it reduced the number from 2.5 million jobs down to 1.246 million new jobs over that time period. And it was over 100,000 jobs overstated per month. Now, I firmly believe the job market isn't as strong as it's believed to be, but we have to go off of the current reports. That's what they trade off of. So that said, Wall Street typically trades on the new reports, not the old ones. So we're kind of shit out of luck. So we are also in a transition to a new administration, and the markets will be super cautious right now to see what changes will come about. We won't be able to see a solid trend for months, probably not until the second half of 2025. And the reports come out really a month after they occur. So it's going to take us some time to see any kind of trend. So I don't see interest rates, mortgage rates doing much of anything for the next 6 months. I think we're going to pretty much go sideways. We might trade in a little small trading period, but not much going on there. So the interesting thing is this: home buyers have also hit the pause button. And in my opinion, this is not a good strategy. The existing home sales reported in October were actually up 3.5% month over month. Why is that? So the most likely answer to this was interest rates were approaching that 6% level in September, the month before the closings in October. So when buyers jumped into the market, that translated to the October sales. So it was a clear indication of buyers feeling more comfortable with lower interest rates and a lower monthly mortgage payment. Who wouldn't, right? The downside to waiting is when the rates do drop, there will be a lot of pent-up buyer demand. So according to MBS Highway, love that service. They're awesome. Barry and his whole team there are great. The median age of the first-time home buyer has jumped from 33 years old to 38 years old. And guess what? Demographically, we are going into the peak of this age category of the millennials for the next 3 years, peaking at almost 4.2 million births in 2027. So it remains high even after 2027. So do those people need housing? Yeah, I think so. They can't live at home forever, right? And some will start inheriting the baby boomer money to help them enter the housing market. So as discussed last week, there has simply not been enough new homes built over the last 15 years to keep up with the population growth. The NAR estimates there is a shortage of 5 million homes. Builders can't build fast enough, and it's costing them more and more money to build the homes. So when interest rates drop by 1%, it can potentially bring in 5 million new home buyers from an affordability standpoint. Now, granted, the U.S. will end 2024 with only approximately 4 million home sales, so not all 5 million are going to jump in, but there is potential demand. There's pent-up demand. The point is, we are not lacking on the potential future home buyers when interest rates do come down. Now, this is a time for serious home buyers to jump in. There is more inventory on the market than there has been for a long time. Houses are sitting a little bit longer. Some sellers are getting a little bit nervous. They want to move on. And the seller concessions are happening. They're paying for closing costs. They're reducing sale prices. So this is a great time to get a good deal on a house, not when everybody hits the play button again and starts to jump back in. That time will come, and it probably will be at the end of next year. So people will ask, but Bill, why would I want to pay a higher interest rate right now? The mortgage payment sucks. Well, yeah, it does suck a little bit. But here's why. When interest rates go down, home values will start to go up. So there's just too much pent up demand and not enough supply. Now, if there were no future home buyers, that would probably be a pretty good strategy. But there's a lot of buyers out there and not enough homes to support all the buyers. So we have already seen a higher rate environment, and home values have continued to go up. They went up again this year. So let me put some numbers to it. So if you bought a $500,000 home with a 10% down payment, you would have a mortgage of about $450,000. If you paid an interest rate, which is currently right around 7%, you would pay approximately $31,500 in interest for the year. Now, if you waited for a year and rates dropped down to 6%, you would almost certainly pay upwards of $525,000, if not more, for the home that you waited for, because there's more buyers in there. So, and that's assuming a 5% appreciation. Now, the new loan would go from $450,000 to $472,500. Now, you do get that 6% interest rate, and your total interest is now only $28,350. Sounds better, right? Nope. You ended up paying an extra $25,000 for the house to save $3,150 on interest, which is a greater number, which is better, having more equity or lower mortgage payment. And the best part is you can refinance that 7% loan that you get now down to 6% and lower your mortgage payment down the road. Enough said. So feel free to reach out to me for a cost of waiting analysis if your buyer is hesitant to buy right now. I would love to help educate them so they can understand their current situation and help them reach the decision that is right for them. And it may not be buying, but I do believe this is an awesome time to buy. So let's run their numbers. Hope you have a fantastic weekend, and we'll talk to you soon. Gaylord out. Bye.